Welcome back in my accountancy class for higher secondary second year. So in our last class we have solved a question from our topic, that is income and expenditure account, and I think all of you have viewed the video and understood the video as well, and I think all of you have no query and confusion. So in our class today we are going to solve another question from that topic, that is income and expenditure account. Okay, so actually when I discussed the theoretical aspects of the income and expenditure account, and as well as when I solved the previous question of income and expenditure account, I think all of you have noticed that this is similar to the profit and loss account. Okay, just the difference is that the profit and loss account is prepared by the trading organization, and some of the items are different in profit and loss account, and income and expenditure account is prepared by the non-trading organization. So some of the items of expenditure and this income are different in income and expenditure account. Okay, but the format and adjustment of different entries are similar to the profit and loss account. Okay, so let's start our class. First of all, I will write the question on the board and you should copy it. Okay, so I'm writing the question on board. From the following receipts, as we know that the income and expenditure account always prepared from receipts and payment account. So the question is, from the following RP account. Okay, so RP account means receipts and payment account. RP account for the year ended, 31st December 2008. Okay, so as in our question it is mentioned that for the year ended 31st December 2008, so we can say that our accounting year starts from 1st January 2008. So for the year ended 31st December 2008, and other details of Tejpur Club, comma, prepare an income and expenditure account. Prepare an income and expenditure account. Prepare an income and expenditure account for the same date. So we have to prepare income and expenditure account at the end of the year, that is on 31st December 2008. So let's see what are the information given in our receipts and payment account. Okay, so as receipts and payment account has two sides, that is left side is receipt side and right side in payment side. Okay, so I am writing the format in in shortcut. It is receipt side and it is payment side. Receipts, payments. Receipts, payments, it is amount column. So what is the first item? Receipts and payment account is always started by cash in hand. So cash in hand on 1/1/2008. Amount is rupees 10,000. Okay, so this is the first information given in receipts and payment account, and as we have done receipts and payment account before preparing income and expenditure account, so we know that receipts and payment account is always started by opening balance of cash in hand or at cash at bank. Next one is the subscriptions receipt. Subscriptions receipt. $20,000. So students, you should copy it in your copy because the question is so long and I have to erase some points because in order to write the whole question. Okay, so Please write the question in your copy. Next, entrance fees. Entrance fees 10,000. Next, donation received. Donation received. Donation received 18,000. Next, donation for club building rupees 17,000. So there is two donation. One is donation received, that is general donation, and another is donation for club building. Okay, so that means the donation for club building, in that topic, in that money, whatever we have received the money, we have to utilize the full for the construction of the club building. So it is a specific donation or it is a capital donation. Next, life membership fees. Life membership fees, and the amount is 5,000. Next, maintenance grant. Maintenance grant. Amount is 6,000. Next, capital grant. Capital grant 6,000. Sorry, capital grant 7,000. The last one is the sale of furniture. Sale of furniture rupees 1,000. So these are the points that is given in the receipt side of the receipts and payment account, and in payment side the first item is salaries. Salaries rupees 12,000. Next, rent and taxes 6,000. Next, electric charges. Electric charges rupees 3,000. Next, sports goods purchased. Sports goods purchased 25,000. Next, annual dinner. Annual dinner rupees 5,000. Okay, so what is annual dinner? So dinner means the the food that we have taken on night. Okay, so what is annual dinner? Annual dinner means that as it is a club, so at the end of every year the club may arrange some cultural festival or some festival. Okay, so in that festival, in every year they have incurred certain amount as dinner and for other specific purposes. Okay, so like snacks, tea and snacks, dinner, lunch, etc. So this amount is the expenditure for the non-trading organization, and they have to incur that amount in every year. So it is a revenue expenditure, and it will come in the expenditure side of the income and expenditure account. Next, construction of clubhouse. Construction of clubhouse 36,000. Next, sundry expenses. rupees 2000. Next, payment of outstanding expenses. Payment of outstanding expenses, amount rupees 500. And the last one is the cash in hand as on 31st December 2008. Cash in hand as on 31st December 2008, rupees 4500. And both side is rupees 94,000. 94,000. 4,000. Okay, so this is the reception payment account of Tejpur Club. So from that we have to prepare income and expenditure account, and there are some other adjustments that is given below the question, but as the space is limited I have to erase all these things in order to write those adjustments. Okay, so before writing the adjustment or erasing the reception payment account, okay, so let's see what is given in our reception payment account. That means each and every item. So the question is from the following reception payment account for the year ended 31st December 2008 and other details that I have not written now. I will write it after the dictating the question. Other details of the Tejpur Club prepare an income and expenditure account for the same date. That means whenever we will prepare reception payment account or income and expenditure account, we will prepare it at the end of the year, that is on 31st December 2008. So first we should memorize what is income and expenditure account. Okay, so income and expenditure account is a revenue account of non-trading organization, and I think all of you have clear that what is revenue item and what is capital item. Okay, so just for your like what is revenue item? Revenue item, okay, understood. Revenue item means those items which are required for day-to-day management of the organization. Okay, and capital items are those which are directly related to fixed asset, that is either purchasing of fixed assets, either acquiring of fixed assets. Okay, so in reception payment account, while preparing income and expenditure account, you have to first identify what are the items, which are the items that is revenue and which are the items that is capital. Okay, so before starting our income and expenditure account, we have to identify what are the items that will come in the revenue items, what are the revenue items and what are the capital items. Okay, so today we will identify each and every item, that is whether it is a revenue item or capital item. Cash in hand on 1/1/2008. So cash in hand on 1/1/2008, that means our asset, current asset. Okay, so asset is a capital item, it will not come in the income and expenditure account, because in income and expenditure account only income, revenue incomes and revenue expenses are given entry. Okay, so cash in hand is a asset, it will not come in the income and expenditure account. Next, subscription receipt. So subscription is the main source of income for non-trading organization, so it will come in the income side of the income and expenditure account after adjusting all the outstanding or prepaid items if it is given in the question. Okay, so we will see in our adjustment whether there is any adjustment related to subscription. If there is subscription related any items, then we have to adjust it, and otherwise we will write the full amount in the income side. Next, entrance fees, that is 10,000. Okay, so regarding entrance fees, life membership fees, I have to check the adjustment. Okay, if they have told me that entrance fees are revenue receipts, then I will take in the income and expenditure account, and if nothing is mentioned, we will not give it entry in the income and expenditure account, because entrance fees have to be paid by the members only at the one time of the non-trading organization, so it is a capital receipt. So we have to check in our question that whether they have taken it as capital receipt or revenue receipt. If revenue receipt, if they have told me that entrance fees has to be taken as revenue receipt, then we will give entry it in the income and expenditure account. Otherwise we will not give it in the income and expenditure account. Next, donation received and donation for club building. There is two type of donation. One is general donation, and general donation is always revenue donation. That means this amount of donations may be utilized for any purpose. Okay, so there is nothing mentioned about the purpose, so it is a general donation, and general donation is a revenue income, so it will come in the income side. Next, donation for club building. Okay, so it means that someone has given donation for the construction of the club of the building. Okay, so he will not pay it again because club is constructed only for one time. So it is the construction of clubhouse is a fixed asset for the non-trading organization, so it is a capital in nature, so it will not come in the income and expenditure account. Life membership fees, that is the fees that is paid by the member only once during the lifetime of the organization, so we will take it as capital income or capital receipt. Next one is the maintenance grant. Okay, what is grant? Grant is donation, and if it is written that maintenance grant, that means non-trading organization every month or every year receives certain amount in order to maintain the whole organization. So it is a revenue income for the non-trading organization, so it will come in the income side of the income and expenditure account. Next one is the capital grant. So in that grant, it is on as it is written as capital, so it will not come in the income and expenditure account. Next one is the sale of furniture. Okay, so furniture is our asset, so we sold asset, so the amount is rupees 1000, so it is a capital receipt. Okay, because whenever we sold any asset, the amount received from that sales is called capital receipt. But whenever we will sold asset, there may be profit or loss. Okay, if it is profit, then it will come in the income side because whatever amount of profit is income, and if it is sold less than its cost price, then there is a loss, and loss is treated as in expenditure, so it will come in the expenditure side. So we have to see when selling of asset, when we sell asset, we have to find out whether there is a profit or loss. Only profit and loss will come in the income and expenditure account. Next, salaries. So salary is the expenditure, so it will come in the payment side. Expenditure side, after adjusting if there is any outstanding or prepaid. Rent and taxes, similarly it is an expenditure. Every month, every year we have to pay rent and taxes. Electric charges, that means for the day-to-day management of the non-trading organization there must be electricity, so it is a payment expenditure for the non-trading organization, and it is a revenue expenditure. Sports goods purchased. Okay, so now tell me whether it is a revenue expenditure or capital expenditure. Okay, so it is a capital expenditure because sports goods are utilized in the sports ground, and whatever we are use, it is called asset, so it will not come in the income and expenditure account because the non-trading organization has purchased some asset and the name of the asset is sports goods. Annual dinner, that I have already discussed, that at the end of every year they organized cultural festival. In that festival they have to incur some amount for organizing lunch or dinner, so it is an expenditure, and every year they have to incur this, so it is a revenue payment. Construction of clubhouse, that means for the construction of the clubhouse they have incurred certain amount. Okay, so clubhouse is constructed, so clubhouse is in like building or some premises, so it is a asset, so whenever they purchase any asset or acquire any asset, it is a capital payment for the non-trading organization. So revenue, income and expenditure account, as it is a revenue account, it will not take any capital items in its account, so it will not come in the income and expenditure account. Sundry expenses, that means expenditure. This point is important, payment of outstanding expenses. Okay, as income and expenditure account is an accrual basis of account. Income and expenditure account is prepared under accrual basis of account. That means all the incomes earned by the non-trading organization during the current year, that is in 2008, whether it is a received or not received, will be taken into income and expenditure account. Suppose the non-trading organization have earned rupees 1000 during the year. that is income, but out of 1000, 500 is received in cash and 500 is not received yet, but we have to give entry the amount of 1000 as income, because revenue in your income and expenditure account is prepared under accrual basis of account. Okay, similarly, it is all the expenses incurred, whether it is a paid or not paid, we have to be taken into income and expenditure account. That means in 2008 we have incurred rupees 1000, out of which 700 is paid and 300 is outstanding at the end of the year. So we have to give entry of full amount, that is 1000. Okay, now see, it is the payment of outstanding expenses. So in the current year, if there is any outstanding expenses, it means the expenses for the previous year. So it is not the expenses for the current year, so it will not come in the income and expenditure account. Okay, because it is the expenditure for the previous year, and previous year, if you will take it in the current year's income and expenditure account, then profit and loss will show the mislead information. Okay, so it is the expenses for the previous year, so it will not taken into income and expenditure account, because income and expenditure account taken any entries that is relating to the current year only. Last one is the cash in hand, that is our asset, so it will not taken into income and expenditure account. Okay, so this is the question, this is the income and receipts and payment account. Now we will write what are the adjustments given in the question along with that receipts and payment account, and I think all of you have noted it in your copy. If not, then write it in your copy. Okay, take a screenshot. Let's see what are the adjustment given. The first adjustments: additional information. Number 1, subscription received. Subscriptions received include rupees. Includes rupees 5000 for 2007. 5000 for 2007 and rupees 2000 for 2009 and rupees 2000 for 2009. Next, subscription for 2008. Subscription for 2008 received in 2007. Subscription for 2008 received in 2007 was rupees 8000. Okay, so this is the first adjustment that is related to our subscription. Okay, subscription is the main source of income for the non-trading organization, and most of the adjustments are relating to the subscription. So there is 3 adjustments. One is rupees 5000, another is rupees 2000, and another is rupees 8000, and we have to adjust it in our income and expenditure account. Next, total of entrance fees. And life membership fees are to be capitalized. Okay, so when I have discussed the entrance fees and life membership fees, I have discussed it that entrance fees is paid only at the entry of the entry at the non-trading organization, that is only once during the lifetime. Similarly, life membership fees is also paid only one time in the non-trading organization. So both are capital receipt. Okay, so we have to check in the adjustment that what are the information given regarding entrance fees and capital life membership fees. So in that adjustment, they told us that total of entrance fees and life membership fees is capitalized. That means whatever amount is received as entrance fees and life membership fees is capital receipt for the non-trading organization. So now tell me whether it will come or not come in the income and expenditure account. Okay, so it is a capital receipt, so it will not come in the income and expenditure account. Next, book value of furniture sold. Book value of the furniture sold on the date of sale was rupees 1,500. Was rupees 1,500. Okay, so I think in our receipts and payment account, in receipt side there is an item that is sale of furniture worth rupees 1,000. Okay, so it is a capital receipt. By selling that amount, by selling the furniture, whatever we receive the amount, it is a capital receipt. But whenever we sold any furniture, any asset, there is either profit or loss. So profit is income and loss is our loss. So this profit or loss have to be taken into income and expenditure account. So the sale or that the organization have sold the furniture for rupees 1,000, and book value of the furniture on the date of sale was rupees 1,500. So it is a loss of rupees 500. So it will come in the expenditure side. Last, depreciation on sports goods is rupees 2,500. Depreciation on sports goods is rupees 2,500. Okay, so depreciation, what type of expenditure it is? It is cash or non-cash? It is a non-cash expenditure. Okay, so if we prepare receipts and payment account, then we will not take depreciation. But as we prepare income and expenditure account, and it is prepared under accrual basis of account, so we have to take all the expenditure, whether it is a cash or non-cash. So depreciation is a non-cash expenditure, and it is depreciation is always on assets. So the asset is sports goods is rupees 2,500. So it is a non-cash expenditure. It will come in the expenditure side of the income and expenditure account. So these are the adjustment related to our receipts and payment account, and from all of this we have to prepare income and expenditure account. So students, you should write all the adjustment in your copy. Okay, so let's start our solution. Expenditure, income. Okay, so I am writing it in short format, and we know in the above of the format, that is income and expenditure account, above we have to write the name of the organization. So you write the in the books of Tejpur Club. Below that write what is the account, that is the name of the account, that is income and expenditure account for the year ended 31st December 2008. And left side is our debit side, that is debit side, and right side is credit side. Okay, so debit side is the expenditure side, because in our profit and loss account we have done, that is left side is debit side and it is expenditure side, and it is income side. Okay, right side. So let's start. What is the first item in reception payment account? It is cash in hand. So cash in hand is our assets, it will not come in the income and expenditure account. Next, subscription received. So subscription is the income for the non-trading organization. Subscription is the income for the non-trading organization, so it will come in the income side. Okay, so before writing the subscription, there is an additional column, that is inner column. So before writing the subscription, we have to check whether there is any adjustment regarding this. Yes, we have adjustment, that is adjustment number 1 related subscription. So we will write it in the inner column. By subscription, it is the income, so it will come in the income side. And what is the amount? Rupees 20,000. Okay, now we will check what is the adjustment. Subscription received include rupees 5,000 for 2007. That means whatever amount of subscription received by the non-trading organization, out of that 5,000 is for 2007. Okay, so we are preparing income and expenditure account for 2008, and the amount we received in the year is 20,000. And regarding this, they have told us that out of 20,000, 5,000 is for 2007. That means this 5,000 is not for the current year's income, it is the income for the previous year, so we have to deduct that item. Less subscription for 2007, and the amount is 5,000. So there are additional information, so we have to write it in the inner column. 15,000. Next, rupees 2,000 is for 2009. That means out of 20,000, another 2,000 which is for 2009. Okay, that means for future year, as 2008 is our current year, 2009 is future year, so 2000 is for 2009, that is for next year. Someone has given advance subscription, so it is not the income for the current year, so we have to deduct that item 2. Less a subscription for 2009, 13,000, because there is another information. Stop. Subscription for 2008, that means subscription for current year received in 2007. That means whenever we received subscription for the last year, there is an inclusion of rupees 8,000 which is for the current year. Okay, so this is the income for the current year, and as it is the income for the current year that we have received in the last year, it is the current year's income. Okay, but we received in the last year, so we have to add that item because it is the income for the current year, but the amount is received in the last year. So in last year we have deduct that item, in current year we have to add that item because this is the income for the current year. Subscription for 2008 received in 2007. That means current year subscription received in the previous year, and the amount is 8,000. This 21,000. There is no other information regarding subscription. Next, entrance fees. So entrance fees, is there any adjustment? Yes, total of entrance fees and life membership fees are to be capitalized. So any capital item will not come in the income and expenditure account. So entrance fees and life membership fees both are excluded from income and expenditure account. Next one is the donation receipt. If it is only donation, then it is the general donation. So general donation is the income for the non-trading organization, and related donation there is no additional information, no adjustment. So we will write in the final column in the income and expenditure account by donation received. Donation received rupees 18,000. Next, life donation for Clubhouse. So for the construction of Clubhouse, and if we construct Clubhouse, it is a capital asset. It is the asset for the non-trading organization. So it is a capital payment, and any capital payment will not come in the income and expenditure account. Life membership fees. So it is capitalized. Maintenance grant. Okay, that means grant is a kind of donation that is received from the either member or non-member or from the managing director of the non-trading organization for the maintenance of the non-trading organization. So it will receive in monthly basis or yearly basis, but every year or every month they have to receive that amount in their reception payment account. It is a day-to-day, it is for the day-to-day management of the non-trading organization. So whatever amount we have received for the, or we have paid for the day-to-day management of the organization, it is a revenue item. So it will come in the income side by maintenance grant. There is no adjustment regarding that, so we will write in the final column by maintenance grant, and the amount is 6,000. Okay, so next one is the capital grant. So as it is a capital grant, so it will not come in the income and expenditure account. Next, sale of furniture worth rupees 1,000. So after selling this furniture, the 1,000 is our capital receipt. So it will not come in the account. But whenever we sold, we have to check whether there is a profit or loss. So how we can find profit and loss? This is the selling price, and if we find the book value, then after deducting it from the book value, we will find the profit or loss. So what is the book value? That is given in the adjustment number 3, 1,500. So book value is 1,500 and selling price is 1,000. So it is a loss of 500. So loss is come in the income and expenditure account in the expenditure side. Okay, so after putting all the entries, we will put that amount of loss. Okay, so these are the information given in the receipt side of the receipts and payment account. Next, salaries. So salaries is an expenditure, and regarding salary, any adjustment is given or not? No, there is no adjustment regarding salaries. Two salaries. Two salaries, and the amount is 12,000. Rent and taxes, it is a payment expenditure to rent and taxes. 6,000. Electric charges, electric charges 3,000. Sports goods purchased. So whenever we purchase sports goods, it is the asset for the non-trading organization. So it is an asset, and in asset we have to charge depreciation, and in our adjustment number 4 there is a depreciation on sports goods. So the purchase amount is our asset, but the depreciation charge is our non-cash expenditure, so it will come in the expenditure side. To depreciation on sports goods. $2,500. Next, annual dinner. That means every year they have to incur some amount on their festival, and in festival there is a dinner, so it is a expenditure. To annual dinner. To annual dinner. Amount 5,000. Next, construction of clubhouse. That means they have constructed a building for that is clubhouse, so it is a asset, so it will not come in the income and expenditure account. Next, sundry expenses, so it will come in the expenditure side. To sundry expenses, 500. Next, payment of outstanding expenses, so it is the income and expenditure account for 2008, and all the items related for 2008 will come in that account. But whenever they have mentioned payment of outstanding expenses, that means that this is not the expenses for the current year, it is the expenses for the previous year. That means outstanding expenses means the expenses that is not paid yet. So in current year's income and expenditure account, they have all the expenses, but payment of outstanding expenses means that any amount of money that they have not incurred in 2007, because it is the account for 2008, so in 2007 they have not paid certain amount of expenses, so it is not the expenses for the current year, so it will not come in the income and expenditure account. Next one is the cash in hand, so it is the asset. Okay, so I have put all the information from receipts and payment account. Now we have to check adjustment. So check the first adjustment, that is subscription. So subscription related adjustment we have done. Total of entrance fees and life membership fees are to be capitalized. That means we have not given entry regarding entrance fees and life membership fees. That is done. Book value of furniture sold on the date of sale was rupees 1,500. That means there is a loss of 500. So loss is we can say that loss is one kind of expenditure because we have incurred that amount, so it will come in the expenditure side. To loss on sale of furniture. How can we find that amount? 1,500 minus 1,500. Okay, so that we have also done our adjustment number 3, and the last adjustment is depreciation on sports course rupees 2,500, that we have given entry regarding this. So we have done all the items from our question. Now we have to balance, that is whether income side is greater or expenditure side. So let's check one by one. 21,000 plus 18,000, that means 39, 45,000. In income side it is 45,000. 12, 6, 18, 18 plus 3, 21. 21 plus 2,500, that is 23,500. 23,500, 28,500, 29, 29,500. Okay, let's take again. 12 plus 6, 18. 18 plus 3, 21. 21 plus 2, 23. 23 plus 5, 28. 28 plus 1, 29, and there is a 5, that means 29,500. So we can say that income side is greater than expenditure side. So that we have to write the larger amount in both sides. 45,000 the sundry expenses is amounted to rupees 2,000. Okay, so there is a mistake of amount 2,500. Okay, so check the balance again. 12 plus 6, 18, 21, 23, 28, 30, 35 plus 5, 31,000. Okay, so the total is 31,000 in expenditure side. Okay, so the difference is 14,000. So that means in income side it is 45,000, in an expenditure side it is 31,000. That is excess of income over expenditure. That means the non-trading organization has earned more income than its expenses, so it is a surplus. To surplus, and in bracket we have to write excess of income excess of income over expenses. So this is the solution of our question. So I think all of you have understood it well, and if any query and any confusion, then contact me, and in our next class we will solve some other question from income and expenditure account. And till then, stay safe and watch this video. Thank you.